Trust in the United States government repaying its debts is eroding. That's according to credit ratings agency Fitch, which downgraded its assessment of the United States on Tuesday. The agency justified the re-rating from AAA to AA+ because of an expected fiscal deterioration over the next 3 years. It also cited repeated down-to-the-wire debt ceiling negotiations that threaten the US government's ability to pay its bills. In a statement, the agency said, quote, "In Fitch's view, there has been a steady deterioration in standards of governance over the last 20 years, including on fiscal and debt matters, notwithstanding the June bipartisan agreement to suspend the debt limit until January 2025.
Look, the only way American democracy can function is through compromise and consensus.
The move comes despite the resolution of the debt ceiling crisis 2 months ago. Fitch had flagged the possibility of a downgrade in May and said after the crisis was resolved in June that it would finalise a review in the third quarter. US Treasury Secretary Janet Yellen said she disagreed with the downgrade, calling it, quote, arbitrary and based on outdated data. In a statement from Press Secretary Karine Jean-Pierre, the White House said, quote, it defies reality to downgrade the United States at a moment when President Biden has delivered the strongest recovery of any major economy in the world. Investors use credit ratings to assess the risk profile of companies and governments when they raise financing in debt capital markets. Generally speaking, the lower a borrower's rating, the more expensive it is for them to borrow. The move makes Fitch the second ratings agency to downgrade US creditworthiness from the top AAA rating, after Standard & Poor's did so in 2011. Analysts said it shows the depth of harm caused to the United States by repeated rounds of contentious debate over the debt ceiling. After the announcement, the dollar fell across a range of currencies, stock futures ticked down, and Treasury futures rose. Yet several investors and analysts said they expected the impact of the downgrade to be limited. Others also expressed surprise at the timing. Eyes next will likely be on the last of the so-called Big Three credit ratings agencies, Moody's. It still has a AAA rating for the US government. A Moody's Analytics report from May said a downgrade of Treasury debt would set off a cascade of credit implications and downgrades on the debt of many other institutions.